Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. There is so much news flow, so much activity. The hope here in India is that maybe the market's already paid the price for what is to come, which is reciprocal tariffs. I mean, the hope is it is, what do you call it, buy the rumor, actually sell the rumor and buy the news. So we'll see if that really works out. Yesterday, of course, was a good session because from the lows, we picked up quite a bit. I'm Prashant. With me, my colleagues Nigel and Rima is with us today. Guys, hi, good morning.
Hi, good morning. It's going to be an action-packed day. It will be dominated by Trump's reciprocal tariffs, the conversations between Prime Minister Modi and Trump. We've got the weekly expiry for the Nifty 50. So brace yourself for news, volatility, noise, and hopefully a rebound.
Well, that's right. And from yesterday's low, it was heartening to see at least we did see a bounce from there. And at least the breadth of the market did improve. After a while, we had 1,000 stocks that were advancing. So, you know, clashing on straws, but at least some kind of positivity, Prashant.
No, absolutely. And I think, you know, the markets, there's no doubt, it's extremely oversold. And we are kind of now running into sort of news flow, etc. So is it going to be the classic sort of, you know, you've come into this event with all the negativity you can. And now that the event is really in front of you, the market starts to turn a little bit, maybe even if it's only a bounce. But let's just start from the top because, as I said, there is a lot of news flow and a lot of news activity. So this is the White House press secretary who made this comment, and it'll come up on your screen. Reciprocal tariffs might come specifically before PM Modi's White House visit on Thursday, visit tonight. Remember, Prime Minister Modi is in the US, and he's supposed to meet Donald Trump, the US president, tonight. You know, and this is the statement which is coming through. This could be posturing, this could be pressure building up to try and put pressure on the other side, but that's essentially what happened. And Trump confirmed that reciprocal tariffs could be signed today or tomorrow, which when I say today, tomorrow, it could be because he said it last night. So it's basically tonight, by tonight, which is going to be New York morning. That's what is the big news flow. I think it's a dominating driver in that sense. If you look at the dollar INR and in offshore and NDF markets, onshore we will know today, but it moved between 10 and 20 basis points. It went up, the dollar rupee cross, which means there is pressure on the currency. And it's interesting, it was only the INR which saw this pressure. Most other currencies on the back of these reciprocal tariff comments did not move. And I think that is because many of these countries, so EU, Canada, Brazil, I'm not putting out what each of these leaders said, but they all last night, within the last 12 hours, expressed willingness to negotiate. And that is the reason why, and of course, we've not heard from the Indian side so far. That's the reason why there was pressure on the rupee, but not on these other currencies, you know, and we heard from them last night. The other big story, of course, was the U.S. inflation numbers for January. That came in very hot, 0.45 month-on-month in Jan. That's beaten expectations. That's above what the last month number was. And then, of course, we heard from Fed Chair Powell as well last night. And that essentially was that, you know, I'm just sort of shortened that sentence, but on rates he said, but we are not quite there yet. I mean, that sentence is preceded by when he said, well, we made a lot of progress, etc., but we're not quite there yet. We want to keep policy restrictive. So that essentially was Fed Chair Powell. 10-year yield price action was up 9 basis points to 4.62. Of course, I mean, yields first jumped when inflation numbers came and the tariff sort of threats, etc., came much later. But both, of course, put upward pressure on yields. Equities were largely unchanged, not very much there. S&P down a little bit, NASDAQ up a little bit. Oil prices pulled back about 2%. We're back at about $75 a barrel. The other thing which I think we'll need to watch out for is the Russia-Ukraine headlines, and I think they will continue over the next couple of days. Trump posted on Truth Social, the social media platform, that he had, and I quote, a lengthy and highly productive phone call with President Vladimir Putin of Russia. And will we hear something being sort of done by the end of the week at that security conference in Munich? And of course, the Treasury Secretary is in Ukraine, meeting with President Zelensky there. So that's the other big global headline into this weekend, which I think we'll need to watch. So just to tie in and close out the levels here. So yesterday the markets fell a lot, but we also saw a strong recovery which came through. The closing levels and the opening levels are largely similar. If you look at the Nifty candle, what that essentially indicates is it's a bullish, bullish price action, very bullish price action with regards to yesterday's candle, plus the oversold readings. I mean, you want to look at the RSI, you want to look at momentum indicators, etc. Markets extremely oversold. So you combine both these, and you get a sense that maybe a bounce is, I mean, even if it's just a bounce, is nearby, is around the corner. The initial hurdle when that bounce comes is going to be the 20-day moving average, which is 23,284. We left off at 23,050 yesterday. For the Nifty Bank, yesterday's low was a 61.8% retracement of the last bounce. It needs to protect. By the way, the Nifty Bank has not yet broken the 20-day. For the Nifty, 20 days the resistance. For the Nifty Bank, it's a support. 49,288 is the 20-day moving average for the Nifty Bank. And resistance comes in at 49,955 and 50,624. GIFT Nifty will give you a sense of how we are likely to start. It's absolutely tentative, undecided, 7-odd point change. Guys.
Well, we've had the longest losing streak on the key indices for now 3 months, with the Nifty and the Sensex down close to about down for the last 6 trading sessions. But, you know, while the Nifty has defended its 2024 low yesterday, or went there and then recovered from there, the mid-cap index is still below its January low. So, you know, that's important. So we're not out of the woods when it comes to the broader markets. For the mid-cap index, the low in January was about, I think, 50,875. And yesterday, the Nifty went down to levels of 49,357, and we still closed below the January lows on the mid-cap index. So that's something you need to watch. But other key important, indicators for our own markets, the CPI inflation, Lata will talk more about it. It's good news. January CPI inflation is eased to 4.3 versus 5.5% in the month of December. So month on month, it's cooled off, and that's positive news. That said, the FIs continue to sell big. Yesterday, they sold nearly 5,000 crore in the cash market, but the DIIs bought nearly 6,000 crores. So they've outnumbered the selling by the FIs. Today is also the Nifty 50 weekly expiry in terms of numbers. There's only one Nifty company which reports numbers, that's Hindalco, but lots of other important mid-caps like SJVN, United Brewery, Senco Gold, Nazara Tech, Mannapuram, and the stock of the day will be Kotak Mahindra Bank, and that's going to be, in terms of individual stocks, in the spotlight.
Well, that's right. Just a few positives that I saw overnight. One was the call between Trump as well as Putin, and they're talking about ending the war. That'll be good for crude oil prices. You had comments coming in from Trump as well as Musk, and he put it on Twitter, that calling for lower interest rates and also some kind of rationality with regard to reciprocal tariffs, both on autos as well as on pharma. So I'll keep an eye on these. These are some of the positives that I saw from the overnight cues. Well, moving to the data points then. The question is, at least in the near term, is there a near-term double bottom in place, which is important because the 22,800, 22,700 odd mark, that's what the bulls are counting on in terms of, holding out. The other important factor is yesterday we did see a bounce, and on the Nifty Bank, there was a bit of short covering that did play out, and that's why that recovered a goodish bit from the lows of the day, because the open interest was down by close to around 2.5%. The positioning on index futures. Yes, the FI is a net short, and they've added to those short positions as well. 6,000 contracts were added yesterday, 85% of their positions on the short side. And we were seeing for the last few trading sessions, and that's only getting more exaggerated from the FI net short positions. It's at the highest we have seen. If you look at the absolute terms, FI is aggressively net short, while clients, they are net long, but close to 1.5 lakh contracts on the long side. This is on index futures. Now, moving to stock futures, you'll say that, well, they added shorts on the index futures, but on stock futures, there was clearly a short covering bounce that did play out. So around 13,000 contracts are cleared out, and they added long positioning as well, telling you that stock-specific action will continue, and there'll be stocks out there that will outperform. The overall positioning on stock futures itself is close to around 60% of their positions are on the long side. So that's important as well. Well, moving to the options data then. Yesterday, the PCR went down to around 0.65. So besides the FIs being net short, because the PCR went to around 0.65, we did see a bit of a bounce that did play out, currently as well at the lower end of the range. Today's expiry, and call writers, they have been feeling confident. So, there's been aggressive writing being seen at both these two strikes, 23,000 call, 23,100 call out. So just punching in the data points, I'll give you the levels. On the upside, the 23,150 to 23,200, that's the level that, the bears will want to defend. So that's very, very important resistance. And the recent lows, the reference low as well, and going by the options data, this 22,750, that's a crucial mark on the downside. The Nifty Bank, well, you've got your reference out there. Yesterday, we went down to those lows of around 48,700, which is important, and the 20 DMA as well. So you don't want it to break this range. And finally, I was looking at the margin trading book that gets uploaded on a T+1 basis. And that comes out on the NSE. So we'll have to keep an eye out for the latest data point. But a couple of trading sessions ago, well, we saw a sharp drop out there, which indicated that there were some margin calls that did happen. And that's why the margin trading book did come down. You'll want to keep an eye out on this data point. But that could be one of the reasons why in the last couple of trading sessions, we saw intense pain in the broader market. So that's a crucial data point that we're looking at.
Well, let's get from the micros back to the macros. While the US inflation data was hotter than expected, India's CPI, or consumer inflation print, has come in at a benign 4.3% for the month of January. But the industrial output for December has come in at 3.2%. To make sense of these numbers, Lata is now joining in. Lata.
It's a very big positive for the economy itself that the number January inflation has come in at 4.3%. Because we had touched 6.2 in October, then went to 5.5 in November, and then 5.2 in December. Now 4.3 is a very big come down from that 6% levels. Also, the goal for the monetary policy itself is around the 4% mark. So this justifies the rate cut that came, and it sows the seeds for another rate cut in April. At least that was the majority opinion, in fact, the unanimous opinion from economists. The number has been dragged down largely by food. Food inflation, which was 8.39 in December, has fallen to 6%. Even from year-ago levels, it's 8.3. So 6% is some kind of a 5-month low or a 6-month low on food, and dragged down largely by vegetables. Vegetable index fell 15% month-on-month, December to January, as did pulses. Pulses fell by about 2%. Those were the two items holding up the food inflation basket, and at least two big ones have come down. Core inflation, which is non-food, non-fuel, that's almost stationary at 3.7. It was 3.6 in December. It's remained under 4% for the better part. So the expectation is that, as we head towards April, you will have the February number, which is expected to be even lower than the Jan number, in which case a rate cut seems like in the bag for the market. But then we have the hotter than expected US inflation numbers. So it's possible the bond markets are not going to react today to these numbers because of the higher yields in the US. A quick word on the IIP number. That's a bit of a disappointment, 3.2. We don't give much importance to the number because it's a December number. All the corporate results have come out. So, we already know what is the level of output. In any case, 3.2 is a disappointment compared to the 4.4 previous month and 5.2 year ago. The positive was power. The letdown was manufacturing. Power was about 6.2, so that was a good number. Capital goods, that was excellent at 10.3. And that ties in with the government's capital expenditure in December, which was, about the best capital expenditure we saw the whole year. So that perhaps has aided that number. Consumer non-durables, FMCG goods, was the huge disappointment at minus 7.6.
All right, well, let's talk about all of this and more, right? And it's all about macro markets in that sense. Satyam Pandey is Chief US and Canada Economist at S&P Global Ratings. He's with us. Satyam, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. So in the next 24 hours, according to the White House and President Trump, reciprocal tariffs will be imposed. First of all, do you think it'll happen, or do you think this is still posturing because Prime Minister Modi is there? Second, if it were to happen, have you quantified what could be the hit? I mean, if the full thing is imposed, complete reciprocity in terms of tariffs, what could be the hit to India's exports, in your opinion?
Well, what I've done is more from the U.S. side, and he is pretty serious about his reciprocal tariffs. It seems like at least it's not going to be as much of a hit to the global economy as a universal 10 or 20% would have been. But if you do back of the envelope calculations on the reciprocal tariffs, you'll probably come around 7 to 8% higher import tariffs coming from the US side. And if there is no retaliation from the rest of the world, including India, you will probably say, all right, it is going to be a one-time inflation bump in the US. and that's it. We are not going to see much of an inflationary cycle from that. But again, we are assuming some hard, restrictions here that the trading partners don't retaliate, and that is a pretty strong assumption to make at the point.
You're saying the average tariffs may go up 7 to 8%. U.S. import tariff
from the U.S. side, because
so
right now the U.S.
2%.
effective tariff rate is about 2.3% to the rest of the world. And if you were to put reciprocal tariffs, it's going to go up to maybe about 7 to 8%. So that is still lower than the 10% universal tariff that he had promised in the campaign.
In terms of countries and trading partners, I was looking at data which essentially showed that if you look at tariffs on products that countries impose on U.S. Products and tariffs which U.S. imposes on trading partners, two countries, Thailand and India, I mean, the difference between tariff rates is the highest. Does that still hold true? This was data from 2022, I think.
It does. A lot of the emerging markets, Southeast Asia and India, they all do have a higher tariff differential versus the U.S. And then you've got the China, and Mexico as well. But if you think about it, it's not just the differences in the tariffs, but also the trade deficit that matters for the president. So you could potentially have an X and Y axis, a scatter plot, where if you have a higher trade deficit as well as a higher positive tariff differential, then the U.S. is going to target you.
Satyam, hi. Would you have the latest numbers of the tariff differential between U.S. and India?
Well, it's not handy with me right now, but maybe on a different occasion I could provide to you.
Okay. So now getting back to the U.S. inflation numbers coming in hotter than expected, and this is even before the Trump tariffs come into effect, when we will have that one-time inflation bump up. What does this mean in terms of the way the inflation trajectory for the U.S. plays out and what the Fed is likely to do this year?
Well, we started out with a pretty strong economy to begin with, and now with the policy mix that's coming in, the tariffs, the immigration curbs, which leads to labor shortages, and then the fiscal, the extension of the tax cuts from back in 2017. It's a policy mix that tends to be inflationary. So there's no way about it. We are going to get this excess inflationary impulse that is going to be persisting through the year, closer to 3% rather than the Fed's target of 2%. So that means for the global economy, for the foreign exchange rates, for interest rates, the U.S. is going to probably stay put for some time to come. We had thought that maybe in the first half of this year, the Fed might get a window to cut one more 25 basis points, but it doesn't look like that's going to pan out anymore. But still, it's a little bit too early to front run all of these policies, right? Because we just don't know how these will be structured, what kind of duration these tariffs are going to be imposed for, and what kind of retaliations we're going to see.
But that point that you made about reciprocal tariffs being better than universal tariffs, preferable to universal, that's interesting but that assumes that tariffs across go down, right? And you don't start to see them going up.
Everybody's tariff same. It's almost like going back to a WTO kind of, everybody have the same equal tariffs, but in a strange, ironic way, we're looking at being at a higher import tariff level, but equal, Yeah.
No, I mean, if the threats work and everybody lowers tariffs, then that could work as well. That means more world trade, volume world trade, as opposed to the other thing. Any view on oil prices? I think you think we should broadly expect the price of oil to be lower. It's very important macro-wise for India.
Well, right now the oil prices has two dynamics going on. One is the one that you just referred to in the beginning of your program that I caught, the Russia-Ukraine war. That they are. It looks like the Trump administration wants to do some talks to at least alleviate some of the war-related issues. But and so that would be a positive supply shock in the global economy. The other one is what's going on with the OPEC supply curbs that they've been doing. that's also important for the oil prices. How much of that is going to be sort of putting a floor on all of these oil prices? In terms of the demand side itself, you've got the global economy that is humming all right now, but with the cross currents of trade and the tariffs, it may weaken some of that demand. But again, we do have a lot of these cross currents in play that looks like we may be just moving sideways for some time, or maybe a tad, downwards, but not much than that, at least from my opinion.
All right, Satyam, just to clear that point on what the Fed does next, there's a probability that they don't cut again in 2025. Is that what you're factoring in?
The probability has risen, obviously, given the inflation number that came out today. It really depends how the policy mix comes through. If it indeed, the tariffs do go through the way that he's been promising through the year, it is going to be 3%-ish or more inflation by the end of this year. So that means the Fed will have to wait it out. They may not have a chance to cut again for this year.
All right. So then we'll speak again. Thank you very much for joining us. Let's see what happens in the next 24 hours. But good conversation as always here on CNBC-TV18. Let's just quickly run you through what's lined up here in terms of interactions. We'll have Shenu Agarwal of Ashok Leyland. Stock was a big outperformer. 8:35, you'll hear from Shenu. 9:20, Amisha of Bofa Securities, who is our market master of the day. 9:30, you'll hear from Crompton Reeves Consumer. So on third quarter earnings, and of course, they're a company maybe poised to benefit from all those middle-class tax cuts. We have Baba Kalyani of Bharat Forge speaking with us at 9:40, third quarter performance. Muthoot Finance, interesting name there, on, of course, numbers and outlook. And, of course, it's the economy special segment, Lata in conversation with Jain Mehta of Amul and Roosevelt D'Souza of Nielsen IQ, and Anjan Chatterjee of Specialty Restaurants on how much consumption is picked up in the third quarter.
All right, time to slip into a short break. We've got a lot of stock-specific action to track on the other side. We'll get to that in just a bit in our special Top 10 segment. Let's run you through the list, though. Kotak Mahindra Bank, Muthoot Finance, Endurance Tech, Crompton, PTC India, NTPC Green Energy, all of them will be reacting to positive news flow, while Bharat Forge, Natco, Honasa, and MFIs will be reacting to negative news flow. Take that mandatory break, come back, we'll get into further detail on all of these names.
Welcome back. Our entire research team is now standing by with the list of the top stocks to watch for the day. And first up, it's over to Abhishek now for Kotak Mahindra Bank. Abhishek.
Well, in the last resort with respect to restrictions being placed by RBI, now RBI has lifted those restrictions on Kotak Mahindra Bank. So the restrictions that RBI had placed was on 24th of April 2024 with respect to, credit cards as well as digital platforms that's being used by Kotak Mahindra Bank. So with this restrictions being lifted, Kotak Mahindra Bank can now issue fresh credit cards as well as onboard new customers via online and mobile banking channels. So it augurs two key positive over here. A credit card, they form about 3.7% of the loans, but they are high net interest margin accretive, ROA accretive as well as ROE accretive book. And given the fact that they can now onboard new customers, it also augurs well with respect to deposit momentum gaining pace. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Tell us about Muthoot Finance as well. How are the numbers?
Well, gold really shined very well for them. So AUM has grown at about 37% YOY and 8% sequentially. YOY is the best growth that you are seeing in last 9 to 10 years for Muthoot Finance. Gold AUM growth is about 34.3% YOY and close to 8% sequentially. The net interest margin has expanded to 11.6% when compared to 10.9% YOY and about 11.5% in the previous quarter. However, the subsidiaries have shown weaker performance. A home finance subsidiary, the net interest margin has declined to 5.04% versus 7.23% in the same quarter last year and about 6.45% in the previous quarter. And MFI sector has been witnessing pain. The management of Muthoot Finance also guided the same, and we are seeing that in Belstar MFI performance, wherein the AUM has declined 1.5% YOY and about close to 9.5% sequentially. With reference to Muthoot's PNL versus is our poll. The NI and PAT is a beat on our poll. Expect the stock to gain in trade today. Back to you.
Okay, as I said earlier, 9:50 you'll hear from the manager of Muthoot Finance, and Alexander George Muthoot will be with us, joint MD at the company. Sudarshan is now joining in. Bharat Forge and Endurance Tech should be in focus as well. So good morning.
Good morning, Prashant. So speaking first about Bharat Forge, it was a weak set of earnings. Company has missed. It was a big miss on revenue front. While for margin, favorable product mix has added the margin. That has helped margin. And margin has come at 29.1% versus our expectation of 28.1%. While revenue was down 7%, it has come at 2,100 crore against our expectation of around rupees 2,300 crore. Now talking about the segments, domestic revenue was down both sequentially and year-on-year. Even export revenue was down 2% sequentially and 5% year-on-year. Defense segment, company says lower sales of defense products, and it was again down both sequentially and year-on-year. Talking about the outlook, company says market conditions in North America is expected to improve going forward, but gloomy economic outlook in Europe is likely to weigh on sentiment. Talking about Endurance Technology, it was steady set of earnings. Revenue has increased 9%, EBITDA was higher by 18%, even margin has improved by 100 basis points. It has come in at 12.5% versus 11.5%, supported by the new acquisition that company has made over the last few quarters. That has helped in revenue growth. And second, EV that forms 49% of total order value also has been growing, basically been seeing a healthy growth. So I'm going with red for Bharat Forge and green for Endurance Technology.
Thank you very much for that. Bharat Forge also in the center of the bilateral talks between Modi and Trump, or it will get impacted. We'll have the management of Bharat Forge joining it at 9:40 a.m. today. But it's over to Upasna now for Crompton.
Good morning. Well, the company reported overall in-line set of numbers. Revenue was a bit lower, while PAT and EBITDA margin stood in line with our poll numbers. Now, revenue growth was lower at just about 4% due to lower ECD segment growth, which stood at just about 6% on a YoY basis. And mind you that the ECD segments form nearly about 73% of the company's sales mix, dragging the revenue growth down. Now, after 5 straight quarters of reporting double-digit growth, ECD segment growth moderated to a low mid-single digit as said earlier. Now, lower at A&D spends of down about 16% YoY drove overall margin improvement to nearly about 170 basis points at about 10.6%. Now, moving forward to the numbers first, revenue stood at 1,769 crores with an uptick of 4% on a YoY basis. EBITDA margin saw an expansion of 170 basis points at 10.6%, and PAT saw an uptick of nearly of about 31% on a YoY basis. Talking about the key segments of the company, ECD segment grew 6%, which was mainly led by pumps and small domestic appliances. Lighting segment also maintained its revenue trajectory of 4% on a YoY basis, and green shoots were visible for Butterfly, and companies on track is what they have indicated as PBIT turned positive at 12.3 crores versus negative 2 crore on a YoY basis. So overall, I expect the stock to open in green today.
Okay, all right, Upasna, thanks a lot for that. Well, in fact, we'll have the management as well of Crompton Greaves Consumer Electricals that will be joining in at around 9:30 a.m. later today. So let's go back to Vivek. He's here to tell us about PTC India as well as NTPC Green. Vivek, how are the numbers?
Good morning. Well, PTC India aided by very robust volume growth. The numbers look quite good. Total volumes up almost 29% on a year-on-year basis. Growth driven by short-term segments, both bilateral as well as the exchange in terms of electricity tradings. Revenues are largely flat on a year-on-year basis, but operationally much better, driven by much lower finance costs. EBITDA higher by 24%. Margin strong, 9.1% versus 7.3%. Profitability higher by 52%. The core margin for the company on a year-on-year basis was a little muted. Q3 coming in at 3.16 paise per unit versus 3.32 paise per unit. Now coming to NTPC Green, both NTPC Green as well as ONGC will remain in focus. A JV between both of these companies has gone ahead and acquired 100% equity stake in a renewable energy platform known as Ayana Renewable Power Private Limited. Ayana, remember, has 4.1 gigawatt of operational as well as under construction capacity of almost 1 gigawatt. What is the valuation at which this particular deal has been done? The enterprise value of the deal is 19,500 crore. So this particular deal has largely been done in line with the replacement cost at which typically a renewable energy asset platform is built. INR shareholders include NIIF, the BI South Asia Renewables, British International Investments, CDC Opportunities Fund, as well as Eversource Capital. It'll be interesting to see how the street takes and reacts to both ONGC as well as NTPC Green on the back of this development.
All right, Vivek, thank you very much for that. So keep an eye out on those names. Natco Pharma and Honasa Consumer are also going to be in focus. Vinny's got those. Vinny, good morning.
Good morning. So in terms of both these companies, we are expecting a red year on the back of their numbers. Now, first, let's go through Natco Pharma. Weak set of numbers reported by the company. Revenue growth seeing a decline of around 37%. Why? Because the Revlimid sales, that has started reducing, and that is seeing a major impact. And because of that, margins also have seen a contraction coming in. 8.29% was 35%. So a sharp contraction in terms of margins, because Revlimid was a big portion of their sales in the export market, and which is seeing a reduction coming in, impacting even the margins of the company. Export formulation sales, they are down by around 53% year-on-year basis, and sequentially down 6%. Domestic formulation sales, that is also seeing a reduction of 3% on a year-on-year basis, and a 6% sequential decline. API sales and crop health sales, they have seen a bit of a good performance. API sales are up 44%, while CHS sales are up 7% on a year-on-year basis. So keep an eye out on Natco Pharma. We are expecting red. While in terms of Honasa Consumer also, we are seeing revenue growth of only 6% that has come in line with what the street was estimating, but the underlying volume growth, that has only come in at 1.5%. Now, obviously, last quarter, we had seen that loss coming in Q2. Now, that has turned into an EBITDA profit this time. But will this sustain? It's still going to be key. Analysts are not too happy with the numbers as of now. Margins contraction is around 200 basis point. 5% is what the EBITDA margin is at. Mamaearth, the main brand of the company, that is seeing a decline in the low single digits as well. So when is the turnaround shaping up? As well as management continues to see pressure in terms of margins in Q4. And that is why we're expecting red on the screen here as well.
Indeed, they're expecting higher advertising and promotion costs in the coming quarter, so which could keep the margins a bit muted. Thank you very much for that, Vinny. It's back to Abhishek now. He's watching all the microfinance lenders. So some small finance banks, what's the latest here?
Yesterday Karnataka CM has tweeted wherein they have mentioned that Karnataka government has signed ordinance to prevent harassment of borrowers by microfinance companies under the pretext of debt collection. So ordinance will come into effect soon, and then they will protect people against illegal loan collection. Now, it's been categorically mentioned that this may not be followed for RBI based, those who have registered with RBI. So unlike to impact mostly with respect to listed entities. However, just to alert our viewers, this may lead to potential delay in recoveries. Now, what happens in microfinance is if one customer sees that the other customer is not paying his loan, then they will also begin to default. So that spiral effect can be seen in the microfinance sector loans that are present in the Karnataka state. A delay in recoveries can keep stress elevated for some of the players like Jana Small Finance Bank, Ujjivan Bank, Equitas, Credit, etc., who have a significant presence in the state of Karnataka. Back to you.
Okay, thank you very much for that. But let's talk about Ashok Leyland. It was clearly the stock of the day yesterday, rallying about 7 to 8% on the back of a strong quarter, very healthy volume growth and margin expansion. Shenu Agarwal, MD and CEO at Ashok Leyland, is now with us to talk. Thank you very much for joining in. It's an all-round beat seen in Q3, and tractors, CV. That's one segment where growth has come back in the last 2 quarters. And we can see that in the margin numbers as well, where you've seen a jump of nearly 100 basis points on a year-on-year basis. What would be the 2 to 3 factors which have driven this margin jump seen in Q3, and is it sustainable?
Yeah, listen, this has been, our continued efforts on 2 or 3 things. Number one was the product premiumization, which we have been working on, trying to fetch better prices from the market. Also, the second is the optimization of the cost, not just material cost, direct, indirect, but also looking at every cost very deeply and see how we can optimize it. And the third is definitely, expansion of our service reach, which is helping us gain slight edge over competition in terms of volumes and in terms of getting better prices again. Right? So it's a combination of these 3. We haven't changed anything. We have been very consistent and focused on these 3 levers for growth. And that is just reflecting in our margins as well.
Right. Mr. Agarwal, will the margin be sustained at current levels going forward?
Oh, I mean, every quarter in last many quarters, we have increased our margins. Quarter four, in any case, gives us better operating leverage because the industry is at its high in quarter four. So we are looking forward to definitely post better margins in the future.
Okay.
Well, the biggest contributor to your business is the M and HCV, forming nearly around 65% of your total revenue. While earnings have improved overall, on a sequential basis, there is a loss in market share as per your disclosure. In quarter two, you had talked about market share being more than 31%, while in quarter three, it's a little more than 30%. Explain this to us.
No, we haven't lost any market share, especially on the retail side. We also track Vahan data, so I think we have actually a small gain in our market share. But yes, we would like to grow much more than what we have been able to do so on the market share front. Our medium-term target on MHCV market share is 35%, but we are slightly above 30% right now. So we have a long way to go, but the good thing is that we have a clear roadmap as to how we will get to that 35% market share, both in terms of expansion of our product portfolio, creating better products which will help our customers grow faster, and also on expanding our sales and service reach. Right, so that roadmap is clearly laid out in Ashok Leyland, and we are rigorously pursuing those actions.
Well, this 35% market share, by when do you think you can achieve it?
No, it's a medium-term goal, so we would like to do that in next 2 to 3 years for sure.
Okay, next 2 to 3 years. Got that. Let's talk about the exports segment. That continues to do well for you. In quarter three, we have seen that you posted a growth of close to 33%. Can we expect upward revision in the FY25 target of around 20-25% that you were earlier talking about?
So actually, in Q3, our exports growth has been phenomenal. It has been close to 33%. But on a YTD basis, also, it is not bad. It is in line with our expectations. The YTD 9-month growth rate on export is roughly about 19%. Right? Q4 also, we have a very, very strong pipeline. So I would say that you would see equally good growth in Q4 also. But going forward, our ambition is larger in exports. Our medium-term goal is to do 25,000 units of exports in the next 2 to 3 years. So again, that roadmap we have laid down very, very clearly. I think by end of this year, we should be somewhere around 15,000. Last year, we were close to 12,000. And, similarly, we would like to kind of continue to grow over next 2 to 3 years to reach that target of 25,000 units.
Mr. Agarwal, you've also announced investment of 500 crores in the EV subsidiary Switch Mobility and 200 crores in Hinduja Leyland Finance. For Switch Mobility, is the funding only for growth? Could you also sort of talk about the order pipeline in the EV segment? For Hinduja Finance, is this done to meet regulatory norms ahead of sort of the planned listing?
Yeah, so order book for Switch Mobility is very good, actually. So Switch India is doing really, really well. Right now, I think they have 1,800 plus orders in their hand. So we are really very confident and optimistic about the prospects of Switch India. And for the same reason, we have put in more equity into Optare, which is a holding company of Switch of about 500 crores now. Which will go, some of it will go into capex, some of it will also go into paying their debt so that their interest burden is also lower. Switch India, we had said earlier that, in another 2 to 3 quarters, we would see Switch India becoming EBITDA positive. So we are still on that journey, and we are still confident that within a couple of quarters, we should have Switch India coming into a EBITDA positive status. Now, the other investment that the board of directors has just approved today is an investment of 200 crores in our subsidiary called Hinduja Leyland Finance. Now, as you know, Hinduja Leyland Finance, we have plans to list it. There has been some delay because of some process issues like regulatory approvals, etc. But we are still hopeful that in Q1 of FY26, we should be able to list the company. Now, just because of this delay, there was an issue in Hinduja Leyland Finance where the capital adequacy was coming slightly lower than the norm. And therefore, we decided that without waiting for the listing, let us just go ahead and induct this money into Hinduja Leyland Finance so it meets its regulatory norms. And then later, of course, in Q1, we will take it for listing.
What would be the outlook for the fourth quarter, Mr. Agarwal, especially on CV front? The earlier target was 6 to 8% in H2 and 0 to 3% for FY25. Are we on track to achieve this range, or considering strong Q4 that you're expecting, there can be growth which is higher than this?
Yeah, listen, Q3 actually has been a great respite, although the industry was 3 to 4% negative YOY basis. But then if we compare sequentially with Q2, which was 13-14% negative, I think this is a major comeback for the industry. Now, Q4, January is already behind us, and we have seen already 4 to 5% growth in January. February and March are looking better. And we are expecting a positive growth in February and March. So overall, Q4 should be good. On the YTD 9-month basis, MHCV industry is about 3% negative, if I remember correctly, on a YTD basis, right? So if Q4 is good, some of it will get nullified. And overall, more or less, we should be flattish in FY25. But the positive momentum that we are seeing in Q4 is actually very good, because if this flows into Q1 and Q2 of the next year, then even FY26 will seem to be pretty strong.
Thanks a lot, sir, for joining in and giving us all of those details. Wishing you all the best and looking forward to chatting up with you rather soon. Well, for the time being, I'll tell you what, we'll slip into a short break. Come back, we'll get you more news and updates on the other side. Don't go anywhere.
Okay, welcome back. There's about 13 minutes to go for the pre-open session. Prime Minister Narendra Modi has landed in Washington for a 2-day visit to the US. My colleague Parikshit is there, and he's joining in from Washington to tell us what is the agenda. There are various leaders calling on PM Modi, including Elon Musk. Parikshit, take it away.
Prime Minister Modi has arrived in Washington, D.C. He will be meeting Donald Trump at the White House, and there will be a difficult conversation on trade. While Donald Trump wants India to reduce the trade deficit, buy more from America, India is likely to send out a clear message. We want to help you with concessions. We want to help you reduce the trade deficit, but this cannot be a one-way street. It cannot be all about making America great again, buying more American products. It has to be a win-win partnership for the US as well. The US has also sent out a message just at a time when the Prime Minister was landing in Washington, D.C. The White House press secretary went on to say that the US will be imposing reciprocal tariffs in the next 24 hours. She did not specify which country, but India definitely could be among the list of countries which could be the target of those reciprocal tariffs. India is devising its strategy. We are going to offer concessions in 10 to 12 areas. If India is targeted with tariffs, that could come up in the conversation as well. But clearly, we are going to see a significant statement on having a trade partnership, perhaps a limited trade deal in the joint statement. And both sides would like to conclude some sort of trade agreement by the time Donald Trump visits India later in 2025. Tulsi Gabbard, the Director of National Intelligence, has already called on Prime Minister Narendra Modi. Tomorrow, Elon Musk, the head of Dodge, the CEO of Tesla, is going to call on the PM. Vivek Ramaswamy will call on Narendra Modi, and so will Mike Waltz, the US National Security Advisor. So, a lot of important meetings tomorrow, and keep watching CNBC TV18 for more.
Absolutely, and we'll keep reaching out to you, Parikshit. Thanks a lot for giving us that quick update. Well, for the time being, we'll slip into a short break, come back, and we'll turn our attention to a couple of stocks as well. Stay with us. Welcome back. Well, let's get in Prakash Diwan, who's here to help us out with some fundamental stock talk. Hi, Prakash. Good morning. Thanks a lot for joining in. Prakash, let's talk about the stock of the day. And the street was sniffing this for the last many months. There's going to be some kind of lifting with regard to that ban from the RBI on Kotak Mahindra Bank. And if you're looking at some kind of valuation comfort in comparison to what it used to trade at, well, that's Kotak Mahindra Bank yet again. It's been a relative underperformer. Do you think the stock is set to fire up from here on? Your view on the stock?
Good morning, Nigel. No, I definitely feel this is taking away a huge overhang from the stock. And you know what the numbers told us, the Q3 numbers that came through, very clearly gave an indication that the bank also is kind of anticipating this and poised to grow very rapidly from here. They managed very incrementally, little bit of improvement in NIMs. It was just 30 basis point. The credit side also was kind of muted, but better than the last quarter. I think what's happening out there is that this is also, coincided with a change in management. So a lot of the people who probably were to be put into the right places to command that kind of a growth has already been done. I'm quite positive on that. And remember, Kotak always has the advantage of other businesses contributing to its growth and not just the core banking side. So, and that's what's happened last quarter. So all said, and in the last 5 years, the earnings have probably doubled, but the stock hasn't. The stock is still where it used to be. So in the last 4-5 years, if you look at the earnings in absolute terms, that earning pool is actually doubled, but the stock is not. So I think the stock will get re-rated. Whether it happens, whether it fires up and gets re-rated or it's a gradual move, I don't know. But it probably should be in that 2250 zones quite soon. And when I say quite soon, it could probably be before the next quarter results come.
All right, Prakash, stay with us. Just take a quick commercial break here. Continue our chat with Prakash. Lots of stocks to discuss. We'll have our technical experts joining in as well. Stay tuned. Okay, welcome back. 2 minutes to go for the pre-open session. There is a fair bit going on, and we'll have the rupee rate come up as well, because as we were saying earlier, dollar rupee did see a big bid in the overseas markets, and onshore we'll see what's happening. And of course, we'll continue to discuss stocks with Prakash Diwan, who's with us. Technicals and how they set up. We have Sudarshan and Mitesh who are joining in to tell us exactly that. Gentlemen, good morning. Good to have both of you here. Mitesh, you go first. What are things looking like?
Yeah. So, yesterday what was important was, Prashant, that 22,800 was tested and we got a good bounce back from there, confirming that there could be some base building activity around that level, which could happen in the future. And as long as this level holds, I think there's a chance of this decline coming to an end around these areas. So, one, we'll keep a watch over there. Now, on the upside, 23,150 is the first level on the spot. If that is crossed, then we'll look at 23,350. So for the time being, market looks like it's trying to come out of that oversold levels. It will be some volatile base building, but as long as 22,800 holds, I think I'll look at buying on declines closer to that levels.
Okay, Sudarshan, good morning. What about you?
Yeah, good morning. Well, it's almost the same as Mitesh has said. yesterday was an interesting day because we went down a lot and then held on to the previous lows. Now, you know, one day's holding on is not necessarily a clear sign, but at least it's a beginning. There is some sign that maybe that level will hold for the short term. Who knows about anything more? But so, as a short term trader, I'm assuming that 22,800 is my stop loss now. That's important because then now I have a risk available for the trade. This is my maximum risk. Any dip is a buying opportunity. And today, if you don't get a big dip, take a small dip to go long. You already know where you want to exit with a loss if necessary. Use call options for the next week. That is today's expiry. Don't dabble in today's expiry. Take call options for the next week and look to go long.
Okay, look to go long. Target on the upside, I missed that, Sudarshan. And when does it get nullified? The long
No, yeah, I don't have a target. I usually don't keep targets. The market goes wherever it wants.
Okay, all right. And on the downside, when does this positive trend get nullified?
See, 22,800 is our Lakshman Rekha. We have to get out if it breaks that. But as the market develops during the day, we should be raising our stops depending on how the market behaves. That should be the final stop.
Brilliant. Got it. Okay. Sudarshan, what about individual stocks?
Well, I have more buy ideas. Ashok Leyland is a buy, stop under 215. Crompton is my only intraday short with a stop above 345. Berger Paints is a buy, stop under 775. And Adani Solutions is a buy, if I'm getting the name right, stop under 740.
Got it. Okay. Got all those names. Mitesh, coming across to you.
Nigel, good morning. I have all buy balls. In fact, Ashok Leyland features on my list as well. And a disclaimer that we have some call options positions over there. So there is vested interest. Recommend buying here with a stop below 215 for targets of 230 and then 235 is the second target. A buy on Paytm with a stop at 732 for targets of 780. Kotak Bank is a buy with a stop at 1920 for targets of 1980. And Bosch is the final buy call. After a big decline, the stock could give a pullback. So buy here with a stop at 27,200 for a target of 27,900.
Okay, all right. Gentlemen, thank you very much for those trades, and we'll come back to you to discuss more. Prakash Devan is with us. Prakash, so much happening, and I'll get to, I'll ask you what you like, but this Trump-Modi meeting tonight, and we'll hear something. Any stock level implications? Somebody was telling me that this Goldium International, for example, I mean, it's so idiosyncratic and so specific, stock specific. It had sold off very sharply, right? Yesterday it pulled back. But apparently if there are reciprocal tariffs, I mean, things like this. So it's very hard to discern. So we're not talking about big sectors, right? But individual small things. But there are listed plays here. Anything comes to your mind?
I don't have that sense of, ability to accurately predict what's going to be the impact on stocks, because there's absolutely no indication on what the discussion is going to be around, Prashant. But what's going to be important for the market perspective from this meet is let this meet get done. Whatever needs to come through in terms of outcome, that needs to be out, and we have to move on. Otherwise, this is the fear of this tariff thing on what's going to happen to India and how things are going to pan out is much bigger than the real thing itself. So I'm actually waiting for this week to be done with and move on, because that will give us more clarity in terms of whatever needs to get damaged, whatever needs to get restricted, that will happen. So not to worry too much about it, but the stock specific thing will happen subsequently for sure.
All right, let's talk about a company that we've discussed in the past, Welspun Corp. That's not corrected at all, Prakash. I think that's the one that you had spoken about, and that could be a potential beneficiary if there are further tariffs. The last quarter's numbers weren't great, but the street appears is looking ahead because the stock is not corrected. It's closer to the 52-week high. Your take on this one?
No, absolutely. This is because it also has facilities within the US, right, which can kind of find a way around on tariffs for imports from India and all. But more importantly, the underlying utilities where Welspun Corp is supplying, those the kind of orders that are coming are very real and they're very translatable within a very short span of 12 to 18 months. So that's the reason why, the stock has that salience. And I can tell you, as the order execution builds up this quarter, we didn't see anything, but Q4 has a significant pipeline that is likely. The call was very encouraging. My sense is this will probably be something which people will find on the way back into India to be investing into. Because now you have to look at the list of stocks which people will invest into in the second wave of infusion. Not, the same old stocks will not do well in all probability, at least not all of them. So these are the names that you'll have to kind of start identifying. But very positive on this, Nigel, as you rightly said.
Okay, and any of these PSU metal names that you're liking, Nalco, SAIL. SAIL, after a while, I saw a positive reaction post the numbers, and I think now the street is content with, you deliver inline numbers, we're okay with it. You reduce debt by some margin as well, you're okay with. Any view on the stock? 105 rupees is what SAIL is at, and Nalco is, I think, 190 or thereabouts.
No, so Nalco continues to be my preferred pick for obvious reason. We've seen the commentary corroborates with this view that alumina doesn't need to be at a scorching level to make money for them. The capacities that have been built itself is going to kind of help them grow organically, and the operating leverage comes in. It's already started to appear, right? In the quarterly numbers, you could see that. My sense is once the EBITDA goes to about 1.8 times from where it was last year, the street will kind of see some visibility of that being continuing. So that's where if you look at the stock behavior, it will probably be very different than the business growth. The business growth, in spite of ups and downs, in spite of this tariff regime, seems to be quite in place because the demand from China is not actually tempered down as much as people thought. The prices have. That's because of logistics and so many other things. But my sense is the business growth will continue for at least the next 12 to 18 months for sure. And then somewhere the stock has to get re-rated and kind of catch up. So that's the theme out there. But very, very clearly, that's probably the preferred pick within the metal space.
Okay, got it. Nalco. Prakash, request you to stay with us. But let's get you some commentary. On the sidelines of the Karnataka Global Investor Meet, Ritu spoke to Mr. Parth Jindal, the Managing Director of JSW Cement and JSW Paints, about the US tariffs, the expectations of safeguard duty on steel, and also about Tesla's potential entry into India. Let's hear out the conversation.
You've seen the US impose 25% tariffs yesterday on steel and aluminium. That's a big step. No exemptions to any country, and they're protecting their domestic economy, their domestic manufacturers. We are just asking for a level playing field. It's not that we need any protection in terms of being competitive like the US does. We have presence in the US, and I can tell you for sure that the US steel industry is not globally competitive, but the Indian steel industry is. And if the steel industry doesn't make any profits, is hit by imports coming in from free trade countries like Japan, Korea, Vietnam, etc., then the investment will dry up in India, and we'll start becoming dependent on them. So I think my expectation from the government, and I think the government is very understanding. They know what they need to do. They are doing the investigations themselves, and we hope to have positive news very soon with regards to the safeguard duties and other tariff measures. I think India is waiting for Tesla to come in. I'm waiting for Tesla to come in as well. We need EV penetration in this country to increase. Last year, India was only at 2%. 100,000 EVs got sold in the passenger vehicle segment. We want to see these numbers go up, and more EV companies coming into our country will be welcome.
Absolutely. That's the other big talking point, right? Tesla. And Anish Shah of Mahindra was here in the studios, and I asked him that. Well, he said the policy for the Indian government has been sell in India, sure, but make in India and then sell in India, which, of course, is not what we're looking at with Tesla at this point in time, unless, of course, something changes. Because I remember, as Parikshit told us, there is, of course, Mr. Musk, who's also going to be meeting Prime Minister Modi in that sense. Yesterday, by the way, autos were all down. Mahindra & Mahindra was a top loser on the Nifty. But, I mean, it was the auto index which was down about 1%. Eicher, Hero, etc. were also big sell-offs that we had seen come through. Otherwise, Prakash, I mean, anything else? Tilaknagar Industries, for example, I don't know if you have a view, from 450 to 250 in about 3 sessions flat. Any thoughts here?
No, I think this is on the back of... not entirely, but quite significantly attributable to this case that they're fighting against allied lenders. ABDA and Tilak Nagar have this major thing going in terms of the use of Mansion House and Savoy brands for whiskies, which is going to take away a lot of the wind out of their sails if that actually happens, if the ABD as a competitor is allowed to use these brands. So I think that's where the market is worried, because in an environment where it's hyper competitive, you lose out on some major brands. It's not so great news for the company. But value wise, Tilak Nagar does offer you a very good, floor of sorts where it is. So if you are okay and if you don't want to invest in the United Twins, then probably this is something which you could look at. But this industry is a bit far more complex than we think, even on a bottom-up basis. So I would recommend that people research and find out whether this risk reward is fine with them. But Tilak Nagar does, at this level, offer you that comfort of buying into something which would only do better from it.
Prakash, thank you very much for joining in. It's 9:10, so let's go across now to Sudarshan for some technical calls. Sudarshan.
Well, Ashok Leyland can be considered for buying with a stop under 215.
Okay, buy Ashok Leyland. Mitesh?
Yeah. I'll go with a buy on Kotak Bank for targets of 90.
Got that. So Ashok Leyland and Kotak Mahindra Bank. But let's talk about Bharat Forge. Sudarshan is now joining in. I think in pre-open, Bharat Forge is down close to about 3%.
Stock is down nearly 39% from its record high that stock had hit in June 2024, and it's 3% away from 52-week low. So basically, it's now opening around 52-week low. For Q3, company has reported weak earnings with all the segments seeing a fall both sequentially as well as year on year. Overall, revenue has come in almost 9% against our expectations. Q3 revenue was around rupees 2100 crore against our expectations of around rupees 2300 crore. So I have two brokerages. First, Morgan Stanley maintains overweight call with a target of rupees 1336 per share. It says uptick in US Class 8 cycle and strong growth in non-auto business can be key catalyst, and stock is trading at FY27 PE of 25 times against 10-year median of 29 times. That's the reason MS is positive. But Citi has a sell call and target is rupees 920 per share. It says outlook is cautious, especially for exports market, and management has called out weak demand in Europe for both commercial vehicles and passenger vehicles. So we'll have to see how does stock behave today in today's trade.
Okay, and we've got the management joining in at 9:40 a.m., so you don't want to miss this conversation. It's over to Upasana now for Hindustan Aeronautics.
Well, JP Morgan has given an overrating on the stock with a target price of 4,958 per share. It says that the company has reported a healthy revenue and profit growth in its Q3 FY25 numbers, and order inflow has been also quite strong. Now, company's revenue grew by 15%, EBITDA by 17%, and PAT grew by 14% on a YoY basis in Q3 FY25, and EBITDA margin was also broadly in line with the estimates. Now, company's 9-month FY25 order inflow stands at 56,000 crores, which is healthy, driven by orders for Sukhoi engines and aircrafts. Now, company's Q3 FY25 order book stands strong at 1,33,000 crores, with an uptick of nearly about 58% on a YoY basis, and HAL expects additional orders worth 1.6 lakh crores, underlying significant opportunity ahead is what the brokerage believes.
Okay, all right, Upasana, thanks a lot for that. By the way, a few stocks are seeing big moves actually in pre-open. Muthoot is one stock that's up close to around 3%. We'll get the management shortly. Good growth out there. There's a potential that their NIMs expand as well as the cost of borrowing goes down, because 50% of their book actually is from banks. So that will flow through with a lag in the coming quarter. So that one's up. Zomato for starters is a little bit higher. Bharat Forge, as we just mentioned, that's a little bit low. And from the broader markets, I was looking at a few stocks. Natco is taking it on the chin actually. Big downtake is what we're seeing on that particular name. It's down close to around 18% with close to around 1 lakh shares being traded out there. So keep an eye out on that one. Zomato as well as Swiggy, both of them, at least for starters, are opening up in the green. So a flattish start, Prashant. Weekly expiry, so things will get volatile in the second half of trade. But the bulls will want to at least battle the first half and hope that you don't see too big cuts, particularly in the broader markets.
Absolutely. And, let's just hope those levels hold, right? We're almost unchanged, nothing on the indices. 10 points on the Nifty, the sensex up about 30 odd points or so. And naturally, I think because today evening and then tonight, late into the night is when you'll have all those headlines coming in from the US. Don't expect anything very large in that sense. Nowadays when we say don't expect anything large, I mean, the hope is nothing on the downside in that sense. Market's oversold, so let's see if there is some fuel in the tank for a bit of a bounce. 50 points on the Nifty is what we have, 45 points, so 23,085 is where we're at. The Nifty Bank is absolutely flat. Sensex is blinking red and green, literally. Mid-cap index is up about 0.25%. And what else? IT index is up 60 odd points, about 0.17, 0.18% higher. Advanced decline is 700 to about 500, so nothing very much in terms of a gap between what's up and down. But holding on. You got about, 15, 16 names which are lower, some starting out and the rest higher. So you got more up than down. At least that's the Nifty heat map, the indication coming through. Prima.
Well, it helps that Asia's firmly in the red. You've got a 1 percentage point plus gain for Hang Seng, Nikkei and Korean markets to, as we begin trade. So that's helping us open up in the green. The mid-cap index is up 0.6 of a percentage point, but the small-cap index is more on the flatter side. Advanced decline ratio in favor of the stocks advancing. 3 stocks in the green for 2 in the red. The top Nifty gainer on expected lines is Kotak Mahindra Bank. As Goldman Sachs says, the company had seen a sharp price-to-book de-rating of 10% since the announcement of the credit card ban. And this is a re-rating event for the bank as it kickstarts a key revenue engine for the bank, improving the earnings visibility. So that's the top gainer. It's a fresh 52-week high on Kotak Mahindra Bank. Other gainers include the Pharma names. So Dr. Reddy's Cipla make it to the second and third position in the Nifty gainers list. You've got Dr. Reddy at Sun Pharma as well. So the top 5 Nifty gainers include 3 of them in the Pharma pack. BEL, Coal India, BPCL. So some of these PSUs are also rebounding. On the way down, it's Titan, top loser. Eicher Motors, Hero MotoCorp correcting a bit. So two-wheelers in reverse gear. Shriram Finance rallied towards the end of trade yesterday, so it's giving up some of those gains. And Tech Mahindra has a cut of nearly 1%.
Well, that's right, Rima. The stocks that are really taking it on the chin is Natco Pharma. That's down close to around 16%. NHPC as well as a little bit low. Actually, that's recovered a little bit. On the flip side, in terms of the top volume gainers, Manappuram, beautiful move out there. That's up close to around 3%, maybe a bit of a rub-off impact. We know that gold prices as well have been firm, so that helps their case in terms of their potential to grow. You also have Patel Engineering, that's up 2.5%. TVS Supply Chain as well as up close to around 2.5%. And Easy Trip is higher as well. Keep in mind, some of these stocks we're highlighting, they have moved up only because of the high volumes that we're seeing. Otherwise, from the peak, actually, I've seen some of those stocks, they have taken a hard knock. Other couple of names from the broader markets that are moving up. Honasa, wow, 6.5% out there. But that's another stock that's seen a big correction from the top. And I think Suven Pharma as well, we'll get the management later on the show, maybe at 10:30 a.m. odd. That stock is opened up in the green. And Tilaknagar Industries, the stock that Prakash was mentioning earlier today, they have that battle in the courtrooms with allied blenders. But for the time being, after correcting from 450 to 250, the stock is moving up close to around 3.5%. Prashant.
Absolutely, and absolutely, it's 200 rupee correction, right? 2 days flat, so a bit of a lift coming through. Bharat Forge, I think, as we mentioned, is down about 4% or so. We'll put out more stocks in a bit from now. The market, of course, is indicating a slightly higher start, but it's tentative. I mean, neither here nor there. That kind of a situation. Amish Shah is with us. He's our market master of the day, head of India research at BofA Securities. Amish, good to have you back on the program. It's good to see you. Good morning, Prashant, this side. Bring in the global intel that BofA has and sort of shine it sharply on where we are at, Amish. The India market, which is, it's been terrible last few weeks now, right? Relentless selling from foreigners, and of course, all the news flow, etc. How are things looking? Let's just start at a broader level and then we'll drill it down to individual sectors, etc. Amish, you'll have to unmute yourself.
Prashant, I would say we are a part of that correction as well. We went bearish on the markets back in August last year. We are still not getting constructive. I think this is a year where Nifty is likely to deliver only a single-digit return. Which is more like making a fixed income kind of returns with equity risk. which is not something that we are getting excited about. Mid and small caps, we think, are still expensive, can continue to correct, and therefore one should expect even lower returns than Nifty, possibly even negative returns. So not in the bullish camp as yet.
I should say, ouch. Straight off the bat, I thought you'd keep it for later. So still not changing your bearish view and expect single-digit returns, and mid caps and small caps maybe actually lower from here. Is that what you're saying, Amish?
That's what we are saying.
Okay. Got that. Now, let me offer, and I'm sure clients also maybe offer pushback, I don't know, but at the margin, right, some of the things are changing. 2 quarters, government spending has been very slow. That seems to be picking up. RBI is certainly easing. There is a marked shift, right, across, say, forex management, liquidity, rates, regulatory aspects, etc. Maybe we're reading too much into it, but it's a change. New dispensation or not. Don't these things at the margin make a difference? Will they not make a difference, Amish?
So Prashant, they do, or you are very right that sequentially, whatever you look at, whether it is capex growth, GDP growth, corporate earnings growth, everything is on a sequential basis likely to improve. But at the end of the day, despite this improvement, if we are going to see consensus cutting estimates, whether it is capex-focused sectors or GDP or corporate earnings, then I would argue that that is still a reason to stay bearish. Despite the sequential improvement. In other words, a large part of that sequential improvement is known and more than adequately still priced in.
So is this a valuation problem then? When we say that valuations are too high, it's also an indirect way of saying that earnings are not coming, right?
So Prashant, if we were to look at it arithmetically, think of it like this, that we will agree that India is currently in a cyclical down cycle or a growth moderation phase. And as a result, it is very hard currently to justify valuations higher than the long-term averages. Even after the correction in Nifty is still trading at 4% higher than long-term averages. And so ideally, that 4%, should become zero. So you're talking about negative 4% from a valuation standpoint, and you probably put 10-12% of earnings compounding through this year. There you're talking about the single-digit returns that I spoke about. So it's a combination of earnings being weaker as well as valuation unlikely to be able to justify in the context of those weaker earnings.
Amish, let's get to the portfolio calls then you have. In August of last year, you had downgraded industrials. So names like ABB, Siemens, BHEL, Havells, and these stocks have corrected 30-40% from its recent peaks. Is the correction done, or do you think valuations are still expensive and there is more downside? At what point do you start turning constructive on industrials?
So Rima, unfortunately, still more downside. So to your point, back in August, we downgraded 13 out of 14 stocks that we cover within the industrial space straight from buys to sells. And that is predominantly my coverage getting into a sell rating. Despite the correction that we've seen so far we've been able to upgrade only one stock and that to a neutral. So I have 1 buy, 1 neutral, and 12 sell ratings or underperform ratings. So look, Rima, I think on capex, between FY21 to FY24, which was a phase of capex upcycle, the industry saw 20% order flow growth, and as a result saw anywhere between 20 to 30% earnings growth as margins improved, working capital cycle improved, and so on and so forth. Now we are arguing that the capex cycle growth is going to moderate to 13%, and as a result, these companies will be able to deliver only mid-teens kind of earnings growth. Which is the adjustment that the markets needs to do, both in terms of earnings cuts and valuation multiple expansion. To your point, on the back of 30-40%, a large part of that is done, but we are not there yet. So still in the bearish camp on everything to do with capex, so not just industrials, but we are as a result also bearish on cement, steel, energy, power utilities, anything that concerns the capex cycle.
Okay, all right. Hi, Amish. Good to see you in. Well, you're sounding, quite cautious actually on the markets, to say the least. But there'll be a couple of sectors that you're positive on. I think the consumption pack, staples is something that you'll have liked. Give us the top 2-3 sectors that y'all are bullish on so we can liven things up a little bit.
Sure, Nigel. So, we are currently positive on rate-sensitive sectors, which is autos, real estate, some internet, some financials. And given that our views on markets are cautious, we are also defensively positioned in healthcare and telecom. On the consumption bit, look, getting into the budget, we did anticipate that there will be a demand stimulus. And as a result, we do like consumption stories, because the benefit of the subsidies to the lower income households and the benefit of tax cuts now to the middle income households is a positive. But that will trickle down slowly through the year in the form of monthly subsidy payments or the tax savings that you would have. Other way to also look at it is that $12 billion or 1 lakh crores of the tax stimulus that the government announced is a good news, but is only 30 basis points of GDP. It is also less than 1% of the India's retailing market. So can it lead to a broad-based growth and a very high spike in terms or a turnaround in the entire consumption basket? Not really. So we are more stock-specific, selective in liking the consumption theme. We are currently positive on jewelry, travel tourism, cigarettes. We are positive on autos, and then finally some of the staple names as well. So very selective within staples and discretionary. We are not broad brush positive on everything consumption yet.
No, got that, and point taken. So this is, you mentioned one number. You said 4% more contraction in valuations, or did I get that right? Or were you talking about, just wanted to clarify that earlier.
So Prashant, that was for Nifty. For Nifty to come to long-term averages, valuations for Nifty needs to correct by 4%. In the meantime, earnings compounds by 12% through this year. So if I'm looking at the mathematical way of looking at Nifty, then it will be -4 plus 12 equal to possibly 8% returns for Nifty this year.
Okay.
What are your global counterparts talking about when it comes to FI flows? We've seen relentless FI selling. The ownership is at a decadal low now. And there is a possibility, I mean, the dollar's getting stronger. Perhaps the Fed doesn't cut this year in 2025. What's going to happen on the FI flows front, to your mind?
So, Rima, I think FII flow continues to stay weak because, just think about it, that the 10-year bond yields in the US is about 4.5, 4.6%. That basically means that the hurdle rate of returns that you expect from emerging markets like India is about 15%, right? Because 4.5% you are getting risk-free dollar return. Add to that another 4-5% rupee depreciation that is widely expected. So that takes you to 9% rupee return, risk-free. And then you would expect 500-600 basis points of equity premium because of you wanting to take equity risk and not a safer asset like a bond. So 15% return, arguably, as I'm highlighting, 15% for the markets as a whole is difficult to justify. For some stocks, yes, but for the market as a whole, difficult to justify. Then why should why should the FII flows be positive India? They will continue to look for US treasuries, US equities. We do think that developed markets this year will outperform emerging markets, including India. And on the point of FII ownership being too low, I get that all the time from investors as well. But I would say that, investors will go where there are returns. Just because their ownership has come down, that is no reason why they will add up. So you can, so FIIs can always first scale back on their ownership, and as and when India gets attractive, they can always scale it back up.
All right. All we can do is do our bit, right? Keep the SIPs going. That's from a domestic liquidity standpoint. But let's focus on another theme that I think you're quite bullish on, which is the healthcare space. And overnight, you had some commentary that even if there are some reciprocal, tariffs, autos as well as pharma could get some kind of a leeway, which is good news as well. Tell us, how do you all want to play this particular theme, the healthcare theme?
No, so absolutely. So healthcare actually fits in quite well. It is a defensive sector, so in a weaker market makes sense. It is obviously also inelastic demand. It is difficult to move supply chains, even from a tariff perspective. even if they want to look at it. So it adds up quite well. Valuations are not as rich in that space. And there are some of the cyclical stocks like generics. There are some structural themes like hospitals. So as a pack, we do like healthcare. It's an overweight in our portfolio as well.
Amish, I don't know if you or your global team has published anything with regards to the Trump-Modi meeting tonight and implications of reciprocal tariffs, etc. I mean, if you have, would love for you to share that with us. I mean, what's the how is the BofA team thinking about this?
Prashant, honestly, on that, we don't have a strong view. The general assumption is that India is too small a trading partner from a US perspective. And as a result, there isn't likely to be too much damage, but that's a hope. Clearly, even the markets are not pricing in too much risk yet from anything going wrong in terms of those discussions. So from my perspective, actually, it's a neutral to a negative event for the market.
Neutral to a negative event for the market. Any thoughts on the forex side here in India, dollar rupee, Amish?
Sure. So the view is that, as RBI is now saying that they will let the currency play its own role. They are only going to look at very large swings, like the way we saw a couple of days back where RBI intervened again. But otherwise, we do think that rupee depreciates. 88.5 is currently our house view, from a near-term perspective. And the 9% valuation of rupee, we think will only close in gradually over a couple of years' time, not immediately.
Any thoughts on sort of export sectors, pharma, IT? If you've sort of touched upon specifically IT, Amish.
So, Prashant, IT is the only sector where we are sitting on neutral weight, and we are basically telling investors that, just go and hug the benchmark. Because if you think about it, from a business momentum perspective, clearly the growth from the US tech spends is going to improve. So we can't complain. It is actually good news there. But at the same time, a lot of that excitement is already known. Earnings growth for IT sector, therefore, is expected to be 13% if you even include the rupee depreciation gains. And as a result, the valuations of these stocks are close to 28, 29 times one-year forward PE multiples, which is not necessarily cheap. So on one hand, you have a good business momentum, but on the other hand, not comfortable valuations, which keeps us neutral weight. And that's the only neutral weight that we have in our portfolio right now.
All right, Amish, just to clear this point on the headline index, at best you get high single-digit returns for the year. At worst, what do we go down to in terms of to bring valuations at par or make it relatively attractive? Downside risk is something that will be closely monitored, given the kind of headwinds that we're seeing, slowing economy, not that great growth. So on the downside, how much could we extend? Just on the headline index first.
So Nigel, I think downside risk principally is only external, which is the Trump tariffs, if I were to call it that way. That is the only key factor that I would watch out for. Most of the other factors, I would say, are domestic linked and is relatively easier to model. So we know that earnings growth expectation of consensus is high. We need to knock it down. Valuation expectations are high. We need to knock it down, and which is how we are arriving at that 8%, 9% kind of returns for Nifty. So I don't think minus something coming out of the Trump tariffs, I don't see too much of a downside risk as far as Nifty is concerned, because anything undershooting beyond that, we will get FII interest looking to buy India again. But on the mid and small cap side, I do think there are quite a lot of downside risks, because in a slowing growth environment, first of all, the large cap companies will try to gain market share from the mid and small cap companies, meaning obviously to shore up their growth. Secondly, from a positioning perspective, investors also will want to get more into large liquid names, from a capital protection perspective, so even that hurts. And otherwise, we have seen that, during market down cycles, margins and working capital cycle for mid-cap, small-cap companies typically deteriorates, which is not even priced in or expected in the earnings expectations of these stocks. So mid and small caps, I definitely worry, not so much for large caps, really.
All right. Amish, good conversation today. Thank you very much for joining us. And it's a pleasure. And hope you come back again as we revisit these views if there's any change whatsoever, because news flow is changing pretty fast out there. Not so much local, maybe local as well, but global definitely. Thanks indeed once again, Amish. Well, let's talk about Crompton now. That's the first corporate now joining us after markets have opened. Third quarter revenue growth has been subdued. Profit has met street expectations. Margin is above estimates. We have the management with us to talk to us about these numbers. Kaleeswaran Arunachalam is Group CFO and Head of Strategy at Crompton Greaves Consumer Electricals joining us now. Sir, good morning. Great to have you with us here. Thank you very much for your time. Before we get into individual segments and the performance of the third quarter, there is this one view in the markets, and I'd like to pose that to you, that companies like you, small appliances, etc. I mean, those are sectors which could benefit because of the tax cuts which have been proposed in the budget. Do you think you could be a beneficiary maybe in the second half of 26? Do you have a view?
Hi, good morning. I think we do believe that it's a great initiative by the government to reduce the personal tax burden. And this is going to give sizable disposable income to target customers that we look up to. And probably around festive, we should start seeing the benefit of this rolling in. And it could be broad-based also. Across consumer durables, we do see the positive impact of this rubbing off.
Which, typically, I mean, which kind of segments will this show up in? Product categories, rather?
See, for us, we have seasonal products. Our large season is in Q4 and Q1, which is fans and coolers led. Subsequent to that, we have other categories that will come in. And probably around Diwali, we should expect kitchen to lead the growth, followed by the other categories.
All right. Hi, sir. Morning. Good to see you in. Tell us about your market share. I think in the fans premium segment, it's at around 25% or thereabouts, but you have a vision to take that up further. So update us on the market share. By when do we see higher levels in terms of a market share, and also comment on the competitive intensity in this space?
Yeah, so before market share, I would like to also talk about the initiatives that we're doing, which will drive the market share as an outcome. I'm very happy to share that we have come out with an indigenous developed platform on fans for both BLDC and induction. We think that will be industry leading, something that's going to be pretty much differentiated and would be loved by one and all. We do have a launch that is planned in about a week from now. Watch out for the space to hear more on this. We think that's going to be really disruptive and differentiated to the fan segment. It's also going to augment our premiumization journey in this. We talked about our share of premium, which used to be about 18% of the business. Today, it's close to 25 as we speak, and our endeavor is to take it up to 40%. This would be led by both BLDC and by the induction segment. Outside this, we are also seeing good amount of growth in fans coming from TPW and summer, which we expect to be similar to last year in terms of the weather. We expect the benefit out of that, and the outcomes should be really positive.
Got that. I think last year, that is, but I just want to get the latest, right? On the lighting segment, how is pricing looking? Because you'd earlier indicated intense competition in that segment. What is it looking like? Yeah.
See, while the competitive intensity for all categories are high, I think we continue to be a market leader in the segments that we operate. Not for 1 year, 2 years, it has been for decades. That's mainly because of the brand and the kind of investment that we are making behind the brand and innovation. Specific to lighting, I think more than the competitive intensity, price erosion was largely due to the technology upgradation, which ensured that at scale, the prices came down significantly. And we expect that journey to continue for some more time. Having said that, as Crompton, we came out with the thought process where we said our first endeavor is to arrest decline in lighting and then start driving growth. I'm very happy to say that as we speak, our B2C segment probably is growing at an industry-leading rate right now. And on top of it, we have held on to margins in spite of investing significantly behind lighting business on marketing also. This is led by also mix upgrade. Our panels and ceiling lamps and lighting segment has gone up Our overall go-to-market initiatives that we have worked out on lighting is also starting to pay dividends right now.
Okay, let's talk about Butterfly then. Out there, that was a positive surprise actually, particularly in the profitability aspect. And you all have indicated that most of that restructuring that had to be done is done. Could you tell us what is the trajectory in terms of growth and the profitability as well for Butterfly? Because if I look at it, I think in the last quarter, you're doing 220, 230 crores or thereabouts of revenues, but profitability has jumped up. So what should we work with just on this one?
See, Butterfly, there has been a slew of initiatives that has been taken. It started with a leadership change. We wanted somebody who understands kitchen as a segment to drive this. And we called out clearly that it's going to be a business that will go through a transformation journey. H1 was more about arresting the decline in revenue, do all those stuff which will help us to reach there. So we did that. And as we got into Q3, the revenue decline has already been arrested. In terms of profitability, there are 2-3 initiatives that has been taken. Calibrated price increases have been taken across segments. Our margin model has been reworked with our channel partners. Some of the overall indirect spends has also been optimized. Plus, one of the things that we also talked about during acquisition is leveraging synergies of Crompton and Butterfly together. There are areas where Butterfly has got good backward integration on manufacturing. We are leveraging that platform for Crompton to benefit on mixer grinders. Similarly, there has been work done on logistics and warehousing to have common warehouses and transporters to reduce cost. So overall, it's kind of a 360-degree work, both on revenue management and cost management. It's moving in the right direction. And as an outlook, we think this business should start now growing in double-digit next year. And our endeavor is to take the margins also close to 9 to 10% EBITDA from where we are today.
I now got that. On solar pumps, sir, could you give us a sense? How large is that business? Because we've seen government focus very much there. But again, it's a place with lots of competitors and many of them now making it to the listed space.
Yeah, that's true. We are very excited on the solar space. I think that's one to watch out for. We are happy to share that as we speak, we have already crossed cumulative 200 crores of order execution in solar. And moving forward, and most importantly, it's critical to note that it's a business that has got good profitability and working capital management is also reasonably strong in this. Now that we have got into it, we have got a platform on which we have established and there is credentials brought in with about more than 7,000 to 8,000 of pumps already being installed. We think this can be accelerated to the next level as we look at next year. The road is pretty strong. I think our endeavor is now how do we build an order book that will help us to accelerate this even further to where we are today.
Okay, all right. Thanks a lot for joining in, sir. Wishing you all the best. And we'll look forward to having a chat with you sometime during this quarter. As you said, the bonanza that came in from Budget 2025 should play out in the second half of this year. Let's focus on another stock, Bharat Forge. That stock is a little under the weather. It's a little bit lower after it missed street expectations, and the stock has lost 35% from the recent peak. To discuss what's the outlook from here on, we are joined by Mr. Baba Kalyani, the Chairman and Managing Director at Bharat Forge. Hi, Mr. Kalyani. Good morning, and always good to see you, Ben. Well, let's focus first on this uncertainty with regard to tariffs. Is there anything you're hearing from your customer base because of these tariffs that could potentially be levied on Mexico, Canada, and some of them, they're important markets for you, right? So your take?
Yes, I mean, North America is an important market for us. Europe is an important market for us. Of course, India is also an important market. The tariff situation is still fluid. We don't know exactly what's going to happen. Only the two tariffs that we have heard, which are going to be put in place in the next few weeks, is the tariff on steel and aluminum. And that largely comes out of Canada, Mexico, Brazil, and some out of Europe. One action that we are seeing because of tariffs coming on aluminum is we have aluminum manufacturing facility for components in the U.S., and we seem to get suddenly a larger traction in terms of people wanting to buy. But, unless that gets converted into a buy, we can't be sure for what's exactly going to happen. So we have to wait and watch how the tariff situation unfolds. We haven't seen the reaction from Europe yet on tariff. But it's a fluid situation. It's not something that is normal business.
Mr. Kalyani, good morning, sir. Prashant this side, and always good to see you on the program. It's a fluid situation. But as someone who's been in the business for a long time, and you've sort of associated with, and you've got a large presence in the US, etc. as well, could broadly the thrust of this new administration sort of, in a way, impede, and here I'm referring specifically on the defense side, some of the Make in India initiatives. It's a large, high-value area, very visible, right? India is the largest defense importer, and we're trying to change that. But buy from the US could, and of course, make in the US, could it, in a way, could that be a road bump towards our efforts and our companies here, sir? Mr. Kalyani, can you hear me? We lost the line. We'll try and have Mr. Kalyani back on in just a bit. But Bharat Forge and, of course, the defense opportunity that Bharat Forge is looking at is also very large. And we'd like to get that clarification from Mr. Kalyani as well. So hopefully back soon.
Yeah, by the time we get him back, Prashant just wanted to highlight that actually the markets went down 50 points in the red, but we have taken support at around 22,950 and we have bounced up from there. You'll want the Nifty actually to move to around the 23,200 odd mark, just purely because it's the expiry day. And the positioning is such that we don't get past that mark, 22,150, 23,150, 23,200, which is the options data indicating. So for the timing, we have moved towards there. The bears are counting on that mark not breaking out. But Mr. Kalyani is back, so let's go
Absolutely. Mr. Kalyani, Prashant here. I don't know how much of my question you heard. My question was with regards to defense. We're the largest defense importer. We're trying to change that. It's a very large, high-value, visible item. And of course, the US most likely will try to tell us to buy more from the US. Is that in any way, will that stand in the way of what we're trying to do here, which is make in India and substitute some of these imports?
Absolutely not. Matter of fact, I think, you will get pushed to buy more things like jet aircraft, fighter planes, and things like that. So I don't think it will impact what you make here. I think the defense opportunity is going to continue to grow. And at least for us, we see the defense opportunity on a growth path.
Okay, since we're talking about defense, could you tell us what kind of numbers we used to work with, Mr. Kalyani? I recall in the past you were doing roughly around 250, 300 crores per quarter. That number went to around 500 crores. But in the past quarter, again, it was in that vicinity of around 350 crores. So what kind of revenue?
It will keep, defense is a lumpy business,
Yes.
Once you execute an order for a high value item for that quarter, this thing will go up. So you please look at it from a year to year basis, and year to year, we will continue to grow our business double digit. That's for sure.
All right. So for the next year, if we want to put in a number for the defense business, should you be in the ballpark of around 2,200, 2,500 crores for FY26?
Yeah, somewhere around there, yes, sure.
Somewhere around that mark. All right. Also, Mr. Kalyani, so that's about the defense vertical. You're sitting a good order book, more than 5,000 crores. So 2,200 to 2,500 crores of defense revenues.
Our aim also is to take the order book to 10,000 crores.
Okay, and execution would be what then if you have to get to numbers? 26 will be 2,200 to 2,500 crores. 27, how much does it go to?
I think every year it should increase by a double-digit number.
Okay.
Normally, defense orders, that's how it grows. We are expecting the ATAGS order to be finalized by March end. That's what the MOD has said. So that is an order that will go on for, in terms of execution, for 3 years.
Okay.
And then that will be followed by other artillery orders and other products that we are developing for the Indian defense, Indian services. So there's a lot in the pipeline, a lot, plus exports, of course.
All right. So 2,200 crores with a double-digit growth at least is what we are looking at from there on. Got that. And that would mean that as a percentage of your total consolidated revenues, it'll be roughly around 13 to 15% or thereabouts. But tell us about business the year and now. I recall in the first half of the year, you said the second half of the year will be better. But in quarter three, you've seen a bit of a degrowth. Will quarter four at least be better?
For the first time in our history, we have had a quarter which I can't even explain to you. But it's been a difficult quarter. It's been a combination of what's happening in Europe in terms of the slowdown, especially in Western Europe. And of course, to a large extent, we have had issues in terms of transportation with our defense business. That kind of slowed it down a little bit. And some of it is, I would admit, is also in our execution. Was not as good as what it needed have to be. And of course, we have a large baggage with our overseas subsidiaries, and we are going to fix this once and for all in the next 6 months. One way or the other, that will get fixed.
So then quarter 4, we'll get back to a growth on a year-on-year basis. Quarter 3 had a lot of pain, but quarter 4, at least on a year-on-year basis, we'll see growth?
Quarter 4 will be better than quarter 3, for sure.
Okay.
On year-on-year, it may not be as good because if you remember, quarter 4 last year, we had very peak defense export orders, export revenues. And those are finished. Those orders have been executed. And the next orders will only come in after March.
Okay, all right. And you just mentioned about subsidiaries, consolidated minus standalone. That's still delivering a net loss of close to 110 crores on a quarterly basis.
Yeah, so we want to get rid of that problem.
That will turn.
That's the challenge for the next 6 months. We need to fix it, and we will fix it.
And you'll turn profitable on that, on those subsidiaries.
We'll turn profitable or figure out some other way.
Mr. Kalani, I latched on to that some other way. You said one way or the other, we'll fix it. What's the other way?
Can't go on with a problem for a long time.
Absolutely.
And it's not possible, okay? It just takes away too much of time and management and creates headaches.
Yeah. But any other, I mean, you want to fix it, but one is, of course, operationally trying to work through things, but are other options also on the table?
Yeah. Everything is on the table. I can't announce it because it has other implications, but we are at least doing a deep dive and deep study into it.
So you could possibly look at a buyer then?
I can't say anything about that. That's
okay, but
you can't put words in my mouth on that.
No, you'll fix the problem, sir. We're just taking note of that.
But it's logical that not completely wrong, right? To suggest that maybe that's also on the table, although you're not saying
wrong.
anything.
No, not wrong. But I've said we'll fix it in 6 months. We'll fix it.
Okay, all right. That's a very, very emphatic statement. Mr. Kalyani, thank you very much, sir, for joining us here on CNBC-TV18. It's a pleasure having you with us here and speaking to you about the business. Well, time for a quick commercial break here. I think the market is doing what it is doing, a bit of a dip, then a bit of a recovery, but lots of stocks are moving big at this point in time. Muthoot Finance is one of them, and we'll connect with the management on the other side. Very strong numbers. Stay tuned. Okay, welcome back. We have the management of Muthoot Finance now joining us. Stocks are surging as we speak, and why not? I mean, gold loan segment has posted a very, very strong rate of growth. The loan growth has been 37% on a year-on-year basis. Let's welcome in Alexander George Muthoot, who is Joint Managing Director at Muthoot Finance, and he's with us now to take some questions. Mr. Muthoot, good morning. Great to have you with us here on the program. Prashant this side.
Good morning.
37%, you've done better than, I think, most banks. So tell us, will you sustain this rate of growth? You've set expectations high, and we'd like to know whether you'll do this better in the fourth quarter.
Okay, but before I get into that, let me just reflect on our 9 months journey so far on this business transformation, which has been a record-breaking quarter for us. We've had the highest ever consolidated loan asset under management with 34% Y-on-Y growth at 1,11,308 crores. We've had the highest ever standalone loan AUM with 37% Y-on-Y increase at 97,487 crores. And we've had the highest ever consolidated profit after tax in the first 9 months of any financial year with 19% Y-on-Y increase at 3,908 crores. We've had the highest ever gold loan AUM growth with 34% Y-on-Y growth at 92,964 crores. And our
Mr. Muthoot, apologies. We have all the numbers, and the numbers are all being flashed as you speak, sir. I'm sorry. And they're very good, absolutely. So appreciate you highlighting all of those. But, we have a limited time, so that's why I sort of pushed you with that number, loan growth guidance for Q4, sir.
See, we usually give a guidance of 15% every year. We've already crossed that by about 29%. We've just started Q4. We are very optimistic and positive that Q4 will also be a very good quarter for us. We're doing a lot of initiatives on the business transformation, on the lead acquisition strategy. We've had the highest ever actually loan disbursements to new customers. Our thrust on new customer acquisition in this financial year has been significant. We've added almost 13,70,178 customers and disbursed loans of 15,723 crores. So our thrust on new market expansion, new customer acquisition through a lot of our digital mediums also, our omni-channel mediums, digital marketing, a lot of branch expansion that has happened. So our thrust on new customer acquisition stands, and we will definitely are positive of a good Q4 also.
And we've asked this to Mr. Muthoot Senior when he's been on the program earlier, that there's this perception that gold loans demand increases when actually the underlying economy is weak. And the economy has been going through a bit of a downturn. So I guess that question does pop up, whether this gold loan surge will continue and for how long. I don't know if you want to take a shot at it.
See, I would say that look at our performance over the years, over many financial years. It has not just been this financial year. Over many years, we've been giving consistent growth and we've been growing from strength to strength every quarter, every financial year. So our thrust of expanding the market through a lot of attitudinal transformation initiatives, because India as a market has 25,000 tons of gold, which is lying unproductive. We are unlocking this dead asset and putting it to productive use. I think that thrust on the attitudinal transformation in the customers is growing by leaps and bounds every year, purely because of our significant investments that we make into marketing, working on the attitudinal transformation of putting this dead asset to productive use. So I would not suggest it is just a reflection of the economy, but also the focus that we have as an organization, being a category leader, industry leader in the gold financing segment, to open the category and expand the category to a whole new set of new customers. And that is a reflection of all the new customers that we've also added this financial year. And that has been a testimony to all the initiatives that we've done on the marketing and the digital front.
Okay, all right. Hi, good to see you, Mr. Muthoot. Could you give us a couple of more details, with regard to growth? And the street clearly likes what you're saying and the kind of numbers that you've delivered as well. Your stock price is at the high point of the day. Now, give us a couple of details. Have you been able to take away market share from any other lenders, like, say, banks? So that's one. And the second point is your NIMs have improved on a year-on-year as well as on a sequential basis. And the incremental cost of funds should start dipping, given that we have seen a rate cut, but it should flow through with a lag. So could you tell us, how do you see your incremental cost of funds decline and what impact will it have on your NIMs?
Okay, first of all, I think one thing that we do, because we have a vast distribution network, we build a lot of operational efficiency into these branch network that we have, because it's a significant branch network, over 7,000 branches. So we have always ensured that the per branch productivity is increased. And this time we are at a record 19.15 crores of gold loan AUM per branch, which was about 14 crores. So we've added almost 5 crores of productivity in this last 9 months itself. So this is a huge operational efficiency that we are building up. On the cost of funds, yes, currently we are about approximately about 9%. Now with the rate cuts that have happened and the banks passing on that cost to the customers, we will definitely hope that we also get that kind of a rate reduction in our cost of funds. And we've also diversified our cost of borrowing across various things. We have also done ECBs also. So I think overall, all in all, like I said, our thrust towards this specialization that we have on the gold financing fund, building operational efficiency, increasing per branch productivity, and also ensuring that we get the best to our customers through our gold standard customer service. I would not suggest that we are taking away share, but I would say we are expanding the category. And the expansion of the category comes with this new customer acquisition and this attitudinal transformation, which I talked about earlier, through various marketing initiatives, digital initiatives that we're doing to a whole new ecosystem of customers, is definitely resonating very strong, and we're expanding the category as such. So as industry leader, category leader, depends on the category expansion.
Okay, got it. What about, you were talking about your cost of funds. What does it mean in terms of NIMs from here on?
I wouldn't give a guidance on the NIM per se. Right now, we are about 11.57%. I think we'll remain around that range itself because, like I said, with the expansion and a lot of work that we're doing on the operational efficiency, we're around 11 to 11.5%. So we'll remain probably at that same segment.
You know, Mr. Muthoot, on the housing side, there was robust loan growth, but PAT was weak. What happened? And also, what is the housing finance subsidiary concentrating on? Affordable housing, prime ticket size, luxury? Give us a sense.
So our affordable housing is primarily on the affordable housing segment. We had a little surge in our cost of borrowing. That's the only reason why the PAT has come down a little bit. But we are growing significantly in that area also because we have a huge set of customers in Muthoot Finance, and we're able to cross-sell to this set of customers also. So we remain focused on the affordable housing finance category.
Belstar, the MFI, we saw pain, but in line with your guidance. How long will the pain last, in your opinion?
I think it's a category issue. I think it's not just our microfinance wing, but I think over the next 2 quarters, things should get better. So I'm looking at, I think, about approximately 2 quarters for things to improve in Belstar. We have a self-help group that we work with. Our collection efficiency is over 98%. And so we are very well positioned there also because of the self-help group that we currently work with. So we're very hopeful over the next 2 quarters or so, things should stabilize much better.
And then maybe if it starts improving, then in FY26, as hinted earlier, we see an IPO?
Well, it is still a board decision. So let's hope and things improve, and then we'll take a decision at the board regarding that.
So at some time of FY26, right?
Yes.
Okay, all right. It's a pleasure talking to you, Mr. Muthoot. Thanks a lot for joining in. For the time being, your stock price is one of the outperformers, going by the past quarter's numbers and going by the guidance you've given as well. 6.5% high. The markets on the whole as well have seen a good bounce. We'll slip in a short break. Mitesh Thakkar is waiting for us on the other side.
One 1.5% higher on the mid and the small cap index. The advanced decline ratio has 4 stocks advancing for 1 in the red. Honasa 5%, PTC India up 4.5%. Vodafone Idea 2 has bounced back. BHEL is a big mover. Zaggle, after seeing lower circuits for 4 or 5 days, today is up nearly about 3%. So lots of gainers on the way up. But Mitesh is now with us for 9-10 calls. Mitesh, it's getting stronger.
Yeah. It is. So I think, one, it kind of confirms that 22,800 now should be taken as a temporary low. 2, I think this also paves way for us to head towards 23,350, 370 zones. Now that's a very important level. So I'm hoping that, we go till there. That will give a lot of exit to people who have been stuck at high levels. And if we start getting past that, then we look at further upside. So for the timing, I think, the market actually looks like on the lower side, you will see some demand as well as short covering, and you might see pressure around 23,350 also.
What level, Mitesh? Sorry, pressure at what level? 23?
350, 370 is what. Sure.
Okay, so a run till there at least before we start.
Yeah,
do anything
that's what I'm
else?
looking at. Right.
Yeah, okay. Stocks, Mitesh?
So I have a buy on SBI cards. That's a buy with a stop at about 840 for targets of 890. And SJVN or Sectoral Jal Vidyut Nigam, I think that's a stock, which is showing early signs of bottoming out around this 90 mark. So we'll take a stop at about 89.5 and look for a target of around 96.
Okay, in fact, SBI Cards has got an upgrade from Macquarie. Abhishek is here to tell us more. Abhishek.
Macquarie has upgraded SBI Card to outperform from neutral that they had earlier, increased the target price to about 1,000 per share from 750 that they had earlier. They say that the tide may be turning and their channel check suggests that credit card slippages are plateauing. So vintage delinquencies as per CIBIL in credit card has been consistently coming down over the last few quarters. So they expect credit costs to start declining materially in next 2 quarters for SBI Card. So they have cut their earning estimate anywhere between 13% to 15% given the lower loan growth, net interest margin and fees impact. However, they say that reduction in sustainable credit cost will actually increase their sustainable return on asset by about 30 basis points to about 4.5%, and that is why they have upgraded SBI Card to outperform from neutral. Back to you.
All right, Abhishek, thank you very much for that. So that is the view coming in on that one. We'll take a quick commercial break here. It's the economy on the other side. My colleague Latha will be speaking with Jayan Mehta of Amul, Roosevelt D'Souza of Nielsen IQ, and Anjan Chatterjee of Specialty Restaurants on how much consumption is picked up in the fourth quarter, Jan to March. Stay tuned. That's coming up.